Hi guys, it was a brutal day on the stock market. Tesla stock is down 8% to $137.80. I was watching it live, guys, as the bulls were fighting to keep the stock above 140, but the bearish pressure was just too much. And right now, one has to look at this. A lot of people are underwater. If you bought the stock January 1, you're down about 60%. A lot of people now are wondering, why is this happening? And does this have anything to do with the fact that Elon is spending a lot of time on Twitter and people are worried about him, spending too much time there while he needs to focus on Tesla? I am going to give you my unqualified opinion. Guys, I am not an investment advisor. This is just for entertainment purposes. This is just some guy with a YouTube channel who just spouts at them out. And don't take anything what I say seriously on this. So, my thoughts are on Tesla is that cars are durables. And that's going to be a very important part. And also, Tesla trades at 42 times earnings, which means that it trades on having high growth over the next few years. And I think those two things are the factors in my mind that's causing the stock to drop. Number one, durables don't fare very well during recessions, because these are things that people have discretion to purchase or not. Like if you have a car that's 7 years old, do you drive it for 3 more years? If it's 10, do you drive for 2 more years? And with a recession, do you feel comfortable that you will have your job in the next year or two? If you lose income, how does it feel to be paying car payments on a brand new car? Those are the choices that households make. And that tends to cause durables to have lower sales. We saw this in the 2008 recession. That was a very deep recession. I'm not saying that this recession is as deep, but this caused the big three automakers, Ford, Chrysler, and GM, all to have serious issues. I remember there was an auto bailout. I remember there's this whole program called Cash for Clunkers. And so therefore, durables, we do know that durables tend to have a problem during recessions. Now, will this one recession be deep? I'm not sure. The next item is, if you're expecting that, then that means that does smart money think Tesla can make those growth numbers? Because it's trading at 42 times earnings. I looked at Ford. Ford hovers between 5 to 6 times earnings. So is it justified at 42 times earnings? And the next item is, I looked at the 10Q, the September 30th 10Q, and inventories are creeping up. Inventories at Tesla crept up, when compared to December 2021. They crept up 4.6 billion. That's quite a big thing on inventory. This is no joke. And so I think that, a lot of people are looking at it and wondering, will Tesla make these growth numbers? Does it have pricing power? I'm hearing rumblings, that potentially there are car discounts happening, out there, to drive to get more customers in. And so with those potential challenges, you can expect that smart money probably is thinking, will they make this growth target or not? And we're seeing analysts do price revisions. And so in the face of that, you can definitely see that, I'm not saying that there's a problem with Tesla, because this company, I think, made over $8 billion in the last 3 quarters. So I'm not saying there's a problem in terms of solvency. What I'm just saying is that are the growth projections, will they be revised downwards? And if you remember last year, it was Palantir, Tattooed Chef, all these companies. And, you look at where they are today. ARK Investments, all of that stuff. ARK Investments, with Cathy Wood. A lot of those guys are under. Like, I saw that Tattooed Chef, is down 92%. I could not even imagine that. Okay, can you imagine that? You invested $100,000, and when you look in your trading account, all you're seeing now is $8,000. That will be a painful Christmas. So anyhow, guys, as I said, I am just covering this out of pure entertainment and just giving my unqualified opinion on this. Please just take this for entertainment purposes. Thanks, guys.